all currencies are collapsing. International currencies much faster than the United States dollar, but the United States dollar is also collapsing. So I have to find property which is not correlated to currency. I need it to be scarce. I need it to be desirable. I need to be able to afford to hold it for a decade, maybe hold it for 20, 30, 40 years. And I want something that's globally desirable, ideal. And the ideal property is something that a person more affluent than me, more intelligent than me, will want from me in a decade. So the case for Bitcoin is it's scarce, desirable property. It's not a currency derivative. It's not a security. It's beyond the reach of a company, a nation state, an agency. You can hold it and you can give it to your children or your children's children. You can take custody of it and you don't have to trust a counterparty. And I think we can see, especially this month, the risk of counterparties is great. If you hold gold in a vault and you're Russia, your gold can be seized. If you have cash in a bank account in Argentina this week, your cash is locked up. If you had Bitcoin with a counterparty like Voyager or Celsius, they might very well block you from withdrawing it. So Bitcoin is desirable because it's portable, it's global, it's scarce, and you can duck a counterparty you don't trust. You can transfer it to a different counterparty, or you can take personal custody. And that's why it's a useful asset right now, and it ought to be part of people's portfolios.
Hello and welcome to Money Talks. In today's video, CEO of MicroStrategy and Bitcoin bull Michael Saylor updates about ongoing Bitcoin volatility, crashes in the crypto ecosystem, and why global fiat currencies are collapsing. Michael Saylor also gives a pitch on Bitcoin investing and why everyone should get into Bitcoin if they want to protect their capital. Make sure to stick around till the end of this video where Michael Saylor reveals why he is long Bitcoin and why he is seeing massive economic breakdown in the near future. So without wasting any more time, let's dive right into the video.
I think we're living in a very uncertain world right now, and there's a lot of political uncertainty with regard to politics, trade policy, labor policy, manufacturing policy. So if you're considering investing in a company, the question you have to struggle with is, will the company be impacted by tariffs or trade policy or tax policy or labor policy or manufacturing policy or a war or a famine? And so that's the first uncertainty. The second uncertainty we have today is monetary uncertainty. We see a lot of countries with their currencies collapsing. In Argentina, they just implemented some capital controls limiting the amount of US dollars that companies are allowed to hold. In Zimbabwe, they're dollarizing. Their currency has literally collapsed to nothing. And so if you're holding a currency or you're holding a company or a bond that generates cash flows in anything other than the dollar, you have a massive amount of uncertainty and risk. If we look at the last 12 months, the euro has weakened against the dollar, the pound has weakened against the dollar, the yen has weakened against the dollar, the Turkish lira has weakened against the dollar. In fact, just about every currency in the world is collapsing against the dollar, anywhere from 10 to 20 to 30%. And in Turkey, it's about 90% in 12 months. So there's a lot of monetary uncertainty to go along with that political and that commercial uncertainty. We call the two things together stagflation. You've got a stagnating economy. You've got an inflating money supply, which means that your currencies are buying less. So if you're any individual and you're looking out over the course of a decade and you have any capital that you wish to preserve, or you're generating cash flow from your job, the question is, what do you do to insulate yourself from stagflation?
MicroStrategy CEO and Bitcoin bull Michael Saylor said that Ether is obviously a security, as he doubled down on labeling Bitcoin as the only commodity in the crypto sector.
you can invest in companies, but which company? If you invest, there's no company in Zimbabwe that'll save you. So I guess if you X out all the international companies and you invest in domestic companies in the country where you live, the question then is, do you actually know enough to handicap their performance? 98% of the companies are actually not monopolies, which means that they're getting eaten by Google, Apple, Amazon, Facebook. So if you're buying a non-monopoly company, it's risky for all sorts of reasons. If the company has employees, it's risky because of employment taxes and labor policy and unionization. If the company manufactures things and moves them cross borders, it's risky because you end up with tariff barriers. It may be, if you manufactured great stuff in China, you can't bring it to the US. Maybe it gets banned. So if you're trying to save your capital by investing in companies, you take on all sorts of corporate risk. If you're trying to preserve your capital by buying bonds are currency derivatives. They're valued based on cash flows. So if the dollar supply increases by 15% a year, you have to discount the bond cash flows by 15% a year. That means that every 5 years or so, they're worth half as much. If you're holding the cash itself, that's obviously a currency derivative. It's collapsing in value.
The CEO argued that constant need for software upgrades on a network driven by a team or an entity represents an indicator that Ethereum is a security. He pointed to the design of the long-delayed difficulty bomb, which he said will murder the entire ETH mining industry as an example of such. According to Saylor, for a digital asset to be classified as a commodity, it needs to be backed by a completely decentralized protocol where nobody can change it even if they wanted to change it. For it to be a commodity, there can't be an issuer. And the truth is, you can't really make decisions. I mean, one of the fundamental insights in the crypto industry is the fact that you can change it, is what makes it a security, he said.
I think last I checked, real estate in Florida has escalated in price 500x over 90 years. 500x. In 100 years, it'll escalate 1,000x, which means that your currency will lose 99.9% of its value against property, scarce desirable property over 100 years. That's assuming about a 7% monetary inflation rate. It looks like the US is running 15 to 20% monetary inflation rate. You can keep track of the strength of every other currency. So if the Great British Pound lost 13% against the dollar, then you're up to 33% inflation rate. And of course, with Turkish lira, you're much higher inflation rate.
Securities are generally understood as fungible and tradable financial instruments that are used to raise capital in public or private markets, while commodities are seen as goods or assets that have a monetary utility. Assets like gold and silver are seen as hard commodities, while soft commodities are goods such as rice or tea. Saylor reiterated that Bitcoin is a commodity as the core of the Bitcoin network cannot be altered, much like the physical makeup of gold. If you want to establish yourself as a digital commodity, then you're trying to create something like gold in cyberspace.
Bitcoin's not going to cost you 40% of its purchase price to hold it for a decade. So the maintenance cost on digital property is lower than the maintenance cost on physical property. The scarcity on a digital commodity, well, that's a function of the protocol and the integrity of the protocol. So if I create a product like Dogecoin and I know I'm going to print more Dogecoin every year, right? It's not quite 5% inflation a year, but it's an inflating supply. Well, then you don't have a hard cap. You've got an increasing supply. It'll continue to increase in supply forever. That's an uncertainty. If a small group of people can change the protocol, that's another uncertainty. The reason that we don't trust stocks as money over 100 years is because the board of directors and the CEO can change the supply of the stock. So Apple might be a good company, but if the CEO of Apple changes, the new CEO might double the supply of the stock. And so it doesn't necessarily make a good currency or a good money over the long term. So I think in short, commodities are increasing in price right now. Oil, wheat, soybeans, natural gas. All of those have surged in the past 12 months. You'd like to hold a commodity that you can hold forever, that it has a supply that is inelastic to the demand. It's kind of hard to dollar cost average into a skyscraper, right? The average person can't buy $387 a month worth of a skyscraper. So it doesn't quite work. You can't buy $200 a month worth of the New England Patriots either. So certain things that look like long-term trophy assets don't work for the average person. You can't stockpile oil for a decade either. I know, I thought about it, when oil got to $0 a barrel, there was a point when it was free. So why wouldn't you just go and get $1 billion worth of free oil, right? 1 billion barrels of it, because you would have made a fortune if you could have, but the average person can't stockpile oil. You couldn't take delivery of it. So at the end of the day, the issue is, most things you can buy are currency derivatives, and currency derivatives are correlated to the strength of the currency. All currencies are collapsing.
So will you buy Bitcoin after hearing Michael Saylor's pitch? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video, and thanks so much for watching.